Good morning. A very warm welcome to everyone joining us today. I'm Nilanjana Das, your host for this informative session organized by SEMS Welfare Foundation under the DG Samaksh initiative. Today's topic, digital public infrastructure in India, is one of the most significant pillars shaping our nation's digital transformation journey. At ACMS Welfare Foundation, our core mission is rooted in empowering life through access, awareness, and action. Whether through initiatives like DG Samaksh, PIM-LIDS, or various grassroots efforts, we are committed to dismantling societal barriers, uplifting communities, and promoting gender equality and employability across India. This session has been collaboratively organized with DG Samaksh, which is a company that empowers business through data and technology. We offer a wide range of services including IT, software, data science, research, consultancy, data analytics, and marketing. Digital public infrastructure refers to the foundational digital system that enables innovation, inclusion, and transparency at scale. India's DPI ecosystem, featuring platforms like Aadhaar, UPI, DigiLocker, and CoWIN, has become a model for the world, driving efficient governance and financial inclusion. Today's session will delve into how these digital layers are transforming India's economy, empowering citizens, and paving the way for a more connected and equitable society. We are delighted to have with us Mr. Sowmya Das Gupta, an accomplished banking and risk consultant with extensive experience in financial services and digital governance. Mr. Gupta has advised leading banks and institutions on digital transformation, risk management, and financial inclusion, making him the ideal person to share valuable insights on this topic. Without taking much time, let's warmly welcome Mr. Sowmya Das Gupta to lead us through today's session on digital infrastructure in India. Over to you, sir.
Yeah, thank you, Nilanjana, for such a detailed introduction for the course and for me. And this has helped me a bit because you already have given a small definition of what DPI stands for and the three foundational layers of DPI, including the identity, payments, and the data sharing. Thanks for that. Now, I welcome all of you to this very, I would say, relevant session because the pace at which we are making changes in the Indian topography in terms of digital access and the use of banking tools, because we are slightly away from becoming a developed economy. And for that, we have to put on all the levers up and try to become that using the excellent infrastructure which we already have created in India, which we are calling as DPI, or the Digital Public Infrastructure. Now, before we start, at the definition of what DPI stands for, or even understanding the nuances. So we would try to first understand the context, right? Why the DPI is very important and relevant in today's context. That is the first question we should ask ourselves. I see around 15 participants, including me, has joined. I would have expected more because this is a very critical area of importance because not only the banking fraternity, but across any industry who are operating out of India and probably in the future in abroad as well, they would be leveraging some stuff from the India stack or the digital public infrastructure which India has built. Now, all of you, I think you are aware that what financial inclusion is, right? Financial inclusion means to bring people under the fold, like at all different pyramids layer, the bottom of the pyramid, medium segment, right? Everyone who needs to be enrolled and want to be in a slightly better of condition. So bring them under the fold of the financial service sector. That becomes of paramount importance, not only in the India, for any emerging country or even for advanced countries. Bringing everyone under the fold of financial services is very important. Now, I would like to make this little interactive. How many of you feel that financial inclusion is important for the Indian context and why it is important? Just one liner answer from anyone. Why do you think financial inclusion is important? What does it do? Yes, anyone from the group?
Because it is a basic need of a human being to have money in hand. And
Yes.
nowadays,
Very good.
we mostly we interact with the banks and financial institutions
Very good.
regarding deposits and mutual fund and other things. So digital financial literacy is very much required.
Right. So financial literacy is one tool by which somebody can become a financial inclusive person. So what we're talking about here is bringing different people who are belonging to different strata in the society and probably are not well disposed of in terms of the orientation, in terms of gender, the religious nature, the region of the place where they belong to. So to bring everyone under the same fold so that they can improve in terms of their financial condition, as Mr. Ghanashyam rightly pointed out, to improve their financial condition. And this actually paves a long way towards not only the micro improvement of the individual whom we are talking about, but if you club the improvements of all the small ticket sizes of the small people, right, who are trying to get under the fold, this gives rise to a huge macroeconomic impact in terms of the growth of the country or the GDP growth of the country. So if you look at it, now India is standing at a particular point where we have certain infrastructure which we call as digital public infrastructure in place, which will not only enable to bring down that gap or the inequality we have in terms of the rich and the poor, the male and the female, and many other kind of paradigms which we have. But the other thing which is of very high importance is that the GDP of the country is also going to be impacted for the huge amount of correlation exists between the financial inclusion and the well-rounded improvement of the country at large. So this is why the digital public infrastructure plays a very key important role in defining where we can be, probably as we envision to become a developed economy by 2047. Digital public infrastructure is definitely going to play a leading role in taking us there, right? So this is the context that why we need. And if you look at the role which India has been playing for the last 15 years almost, right, they have been silently developing, I would say, a spectacular thing in the form of digital public infrastructure. Because as we speak, the first challenge which the government faced was in terms of including people, because many of the people in the Indian subcontinent, they did not have any bank account, right? So to bring that those people into the bank account, into the banking arena, so you needed something which would mobilize the flow of people. Then we had this need of engaging these people with the system, right? So the need was there to make sure that the flow of payments happen because they keep engaged with the systems. And then finally, when we have a huge amount of payments being done in this particular financial system, a new thing was how to leverage the data which was getting churned out through those payments, right? If I look at this particular thing, I would request all of you to kindly put on mute. Apart from if you have any questions, yeah, otherwise let me put you on mute if it is, yeah, I have muted. Okay, so what we have understood is that there are three foundational layers in which we can promote the financial inclusion, right? The first, the flow of people. So how did India do that? We had something called as the Aadhaar, in which the people could get an identity, and it removed that hurdle or the obstacle which banks were facing in terms of making the people giving loans or enrolling them to bank accounts, because there were so many duplicate problems. So Aadhaar not only removed that duplication issues, but it also brought that trust. And now we have 1.3 billion people in India who have been Aadhaar enrolled. And this paves a easy KYC process, a easy onboarding process for the banks, right? Which had taken long time in the days of yore. Now it takes, say, in an instantaneous moment, you can just get a eKYC verified, right? And then the authentication can be done in a seamless fashion. So the first problem was, or the challenge was in terms of the flow of people, which Aadhaar took care of. Then how to retain these people in the system. So once they have been enrolled, so we have to keep them continuously engaged in the system, right? So for that, this UPI, Unified Payment Interface, that was a foundational block which helped people to send money to one another. And now it has become so seamless that unlike the previous years where you had to add the account numbers, wait for 30 minutes for the NE50 transaction, or you had to know the details of the bank details, etc. Now only if you have the UPI identifier and you have account in any of the banks, you can send that particular amount of money to your friends and relatives who are having accounts in any other bank, just knowing their UPI ID in a runtime fashion. So that problem, how you engage with the people, right, got solved because the payments give rise to that. Now, with payments happening, we had a huge amount of data. If you talk about the companies who are dealing with the payment information, say your Google Pays or Phone Pays or Paytms, they are dealing with huge amount of transaction volumes, right? And this particular transaction volume has churned out a huge amount of information of the customer as well, because with these transactions they can know about the buying habits or spending habits of different customers, right? So this amount of data, and alongside that we had the digital footprints being created in terms of hard copy being changed to be a soft copy, right? And which can be used in an updated version. So all the digital footprints and the information which gets out of the payment transactions, they could be easily used to make sure that this data gives empowerment to the customer who is sitting at the end. Now, this is the third foundational layer where we are talking about the data sharing. That means by dint of customers' own data, how can the customer be benefited? So these are the three foundational layers by which the digital public infrastructure has been conceptualized, and then we have seen a lot of solutions around. So with this, I will try to share my screen. Just let me know if you can see it. Yeah, it's coming up. Can you see it? Someone please confirm if you can see the screen.
Yes, sir.
Yes, sir.
Right.
Yes, sir.
Thank you for confirming. So let me put this in a full screen mode. Right. So now you have understood the context, right? Why did we need this kind of infrastructure in the first place? We had this DPI which got conceptualized in three different layers. First, we wanted to onboard a lot of people so that we can have a huge amount of financial inclusion. So we had Aadhaar, in which we enrolled or onboarded various customers who were earlier not part of this particular financial inclusion block. So they got their bank accounts through this JAM Trinity, right? Jan Dhan, Aadhaar, and Mobile Trinity. So if you look at the numbers, they are really staggering. So in 2008, 1 out of 4 people, they only had a bank account. And if you look at 2025, almost 90% of the people, right? 89% to be precise. This otherwise, without the use of any kind of digital public infrastructure like Aadhaar, this would have taken a long time of 53 years. This has been shortened by 47 years. That means in just 16 years time, we have been able to reach a feat which is completely unimaginable, right? So this was the first layer in which we are talking about the first foundational layer of the identity, in which we have a API-driven identity which can easily be verified and authenticated by different banks while they are onboarding a customer into its own portfolio. And with this use of the identity portal, the government has been benefited a lot as well, because there are so many different subsidy programs. Previously, the problem was that it lacked transparency. So the banks or the central governments had to rely on a lot of middlemen, right? A lot of brokers who were given the responsibility of making the benefit transferred to the beneficiary, the end people, right, who were needing these subsidies the most. But there were a lot of corruption, a lot of operational failures. Now, with the use of technology, like which Aadhaar has given to us, the system of direct benefit transfer could be expedited. And the government can do it very fast. And if you look at the numbers, around $80 billion of direct benefit transfer, which is the largest DBT program in the whole of the globe, has been rolled down in India, right? All thanks to this DPI, or the digital public infrastructure which we have. Then also looking from the banking perspective, the banks also have got a lot of benefits, because the turnaround time which it took to onboard a customer, and also the cost, because the bank had to go and do lots and lots of due diligence to understand if the customer is really a genuine customer or not. Now, if you have the information stored in a Aadhaar system, for the bank, the cost not only decreases. If you see the cost, it has come down by almost 50%, right? And also the time it takes to do all this kind of due diligence gets much slashed, because they can do almost on a runtime basis. So you can see that what the system of identity or the Aadhaar has brought, the kind of benefits which we have got using the first pillar of DPI, which was to do with the access of people to the financial fold. Now, once we had that, in 2010, we had got Aadhaar. So for the next 5-6 years, we had been enrolling a lot of people into that fold. In 2016, we had the UPI coming to the forefront, and UPI, when it started, it was very small, making only a few transactions here and there. But now, if you look at the scale, how we have scaled up, right? Last year, we had a transaction value of 261 lakh crore in Indian rupees, right? Which is the highest. So recently, maybe you have read the newspaper that UPI has crossed even Visa in terms of the global payments, the real-time payments, right? So now UPI comprises of almost 52% of the global payments across the globe, and out of which 85% comes from your UPI itself. So we can understand that how things have moved, right? Because previously we were dependent on the private players, like say the Visa, MasterCard, even the bank's own channels. Either we have to send money or not. How do we send money? What kind of tariffs and commissions we need to pay? Now UPI for the retail purpose is completely free. and it's real time. So you can send money and you do not need to wait even to add a person's account to send that money to. So if you have a new beneficiary, you can just get the UPI ID and instantly send the money. Use a QR code, or you can just know the UPI ID, or even just by mobile numbers, right? So there's so many different means by which you can send money instantaneously. Now, this is the second foundational layer. So first foundational layer we talked was about the identity, in which Aadhaar played a very important role. The second part was the payment part, in which you kept the people who got enrolled in the system to get engaged. So UPI played a pivotal role out there. Now, with the churn of huge amount of data, right, which we get through the transactions of UPI, and also different financial information providers, they are actually making their movement from a hard copy to a soft copy. So you have huge amount of data, and government has created a framework in which this data can be used by the customer for himself. So unlike the private companies, like as you see that probably the big techs, right, who are getting our data, and they are using that data to do some kind of advertisements for us. If they want to sell their products, they will use my data to advertise their products so that I can be influenced and then sell the product. So in the contemporary sense, the private players have been using our data for their purpose, for their private purpose. But now the Indian government, which is initiative of account aggregator, right, data sharing framework, what it has done, it has given the customer the primary focus. That means the customers will decide whom the data can be shared with, how the data can be shared with, and if that data sharing is impacting me or not as an end individual. For example, if I would like to get data from different bank accounts, say I have got 5 different banks who are holding my accounts, right? So if I would like to have an aggregated view of my outstanding balances across 5 different bank accounts, so I have the leeway to give a financial information, say a fintech company, that flexibility that they can go and retrieve data using the account aggregator framework and show it to me. And even the technology has been built in such a way that account aggregator themselves cannot look into the data. They can only display that data to me. This is the beauty by which you are keeping the focus on the customer, and the data which is being generated for the customer is being used by the customer itself. Unlike the conventional private players who are using my data for their own purpose to do more advertisements and do more sales, right? This is the beauty where the Indian DPI has a major novelty, that it has kept the customer at the center, and we are empowered in terms of how do we share data, what data do we share, and what end purpose does it serve to us, right? This is the way forward. So because this is something which India has developed, and we call it as India Stack because it comprises of different kinds of services which we can avail of. But the name India Stack is only denoting that a particular API stack has been developed in Indian context. But this can be exported to other countries as well. Say if you talk about many countries like Dubai and others, they already have started using various components of our India Stack, right? So just keep in mind that when we talk about India Stack or Digital Public Infrastructure of India, it's a homegrown solution. It's a homegrown framework which can be exported. And even if, say, a Dubai guy is using our DPI, we still call that as the India Stack because it's the name of the stack which we have. So now, moving on, I hope the context is clear to everyone. Is there any question from anyone? This is a very important perspective you should bring, that how DPIs are making a change, and going forward how it can be a game changer in terms of how the data is being consumed and being distributed, right? Any question from anyone so far? Otherwise, I will take the questions at the end. Okay, so moving on. So now as we talk about as we have spoken already about the context, now let's try to understand a brief into that what exactly are these public infrastructures, right? So what is the infrastructure, right? See, infrastructure we all know. We have seen the government building infrastructures which are mostly physical infrastructure. That means we have the rails, the roads, the bridges, etc., right? Which were physical in nature, all tangible. And these needs huge upfront costs. And also, these are the first layer of innovation. Unless you have your roads, your rails, your bridges in place, then you cannot drive the first layer of innovation in your country, right? The country has to grow first because the government is sponsoring a lot of infrastructure for the use of the common people like us. And though all the public infrastructure has been built using a private-public collaboration, a PPP model, right? But predominantly this has been done for the major use of the common public. Now, when it comes to the digital public infrastructure, it actually has a lot of similarity with the physical infrastructure. The only difference is that as in physical infrastructure, you can all visually see the bridges, you can travel over the roads, right? Here in a digital public infrastructure, it's a mix of both hardware as well as software. That means in the digital public infrastructure, you have got a lot of technology components, right? You have got the servers, you have got the hardwares, you have got the different networking cables, etc. These forms the hardware part of it, which is minimal. But the major part of it is from the software portions, right? The APIs which has been created, the softwares which has been written. And this has been done in joint collaboration with different private entities and different Section 8 companies, non-profit companies, who have created solutions. So the role which government has played in the Indian context is that it has acted as a facilitator. It has tried to give a kind of governance for Section 8 companies to create solutions. For example, if I talk about a company called NPCI was a Section 8 company who has created this technology called UPI. Now, this UPI is a technology which has been created in a very efficient way and in an interoperable way, which means though UPI has created this, NPCI has created this, but it has given some kind of open API for the private players to consume as well. So if tomorrow Google Pay or a Phone Pay, right, or a Paytm, they would like to make a UPI transactions, they do not need to recreate the UPI technology. What they need to do is to just tap onto the UPI APIs which NPCI company has created, and these private companies can build innovation on top of it. Similarly, the same goes for your Aadhaar as well, right? So Aadhaar has been created by the UIDAI. It's a Section 8 company again. But this solution has been enabled. This API has been exposed, and people who would like to do a KYC authentication or Aadhaar based OTP authentication, they can actually use this particular APIs which UIDAI has created. Or even for that matter, if you talk about the latest account aggregator framework in which data sharing is being enabled, we'll talk about that in a bit. But just to try to get the context, that when we talk about these Section 8 companies, right? Sowmya is the company which created the account aggregator framework. So they are creating interoperable APIs. Now, I am sure that many of you know what API is, right? Is there anyone in the group who do not know what APIs are? Is there anyone who doesn't know what is an API? Please let me know. I will just quickly explain. Application Programming Interface. Okay, I guess few of you may not know, so I will just take a two-liner hint of what APIs are. So for example, see, if you would like to, let me draw the example of parallelism with a restaurant, right? So if you go to a restaurant, right, and then you order, say, dosa and idli as food, do you need to know that what are the ingredients which make dosa and idli? No, right? You just give the order to the waiter takes the order, goes to the kitchen, and then asks the chef to prepare your dosa and idli, and then once it is prepared, it brings to you. So here the waiter is playing the role of the API. It's a messenger, right? Where you do not need, you as a customer, you do not need to understand the complex process of dosa preparation. You do not need to understand the complex process of idli preparation, right? So these are completely abstracted from you. What API is doing, API is taking a request from you in a certain format. So there is an order book, he writes down one piece of idli, one piece of dosa, etc. That's a standard format. He goes and shows it to the chef prepares and delivers. The waiter delivers it. So now, in case of API, what happens? If you are trying to use someone else's software, for example, if in your mobile device, you can see there is a time given on it, right? So, or you would like to know the weather for today. So the company who has developed this particular mobile, right, they do not need to invest in creating a weather app, right? What they do, they actually take the support of companies who are experts into this, who are creating the weather app, etc. And then that you are just sending out a request to see the weather, right? And then the response comes back to you. So you do not need to know that at the background how things are being operated. Same is the case of the API. So what is happening here is that companies like NPCI, right, National Payments Corporation of India, so companies like this, they are creating APIs. That means for private companies like, say, Google Pay, Phone Pay, etc., they would take the inputs of customers in a certain format. Say, and the name of the beneficiary, how much amount has to be transferred, etc., in a standard format. And once it goes to the UPI server, the action happens. So it is connected to each of the bank's core banking services. Whenever there is a request and all the authentication process is done correctly, then debits and credits happens at the core banking level of each of the particular banks. So as a customer, me or as the payment company, which is the Google Pay or Phone Pay, they are completely abstracted from the underground mechanisms. They do not know how a UPI is working. They just need to provide the right information to get the process done. This is exactly what has happened. Through the use of digital infrastructure, what government has done, they had endorsed entities like NPCI, UIDAI, Sahamati. So these are the Section 8 companies who have created all these exposed API layers. That means they are giving just the formats in which the private companies need to give the data so that the actions can be done. So as you can see, this has given rise to a huge amount of innovation. A lot of new business models have come up. For example, if I talk about payment aggregators, if I talk about account aggregators, so these are the new business models which were not even thought out before. Now with this kind of democratic layer of where everyone can hop in and use the particular API layer, it becomes the innovation much faster, even for small companies who do not need to invest too much money in making that complete mechanism being completely built from the scratch. They can just tap onto UPI's API layer, get the particular API, give the inputs and get the output. That is it. That is where the innovation actually can start from. So this is what digital public infrastructure can do, and for users who are using digital infrastructure, they are very well benefited. But for people who are left out in this journey, right, there's a huge amount of disproportionate benefit for people who are using it and not using it, right? Any question so far from anyone? Any question from anyone so far? Okay. We'll take it a no. Now let's try to understand that what this digital infrastructure has brought in terms of the benefits, right? The first which we see is the access and inclusion. Now with the foundational layers like the identity layer, Aadhaar, with your payment layer, UPI, with your account aggregator layer, right? So with this, all these kind of layers, what it enables is first of all financial inclusion. That means people who did not have bank accounts, only 1 in 4 people had in 2008. 1 in 4 Indians had access to bank accounts. Now almost 90% of people have their bank accounts, right? Now with this kind of data, there has been also a huge amount of transparency as well. Because now what happened? Previously, the banks, they were only relying on the data which customers were provided. With the advent of frameworks like account aggregator, the banks can actually get huge amount of information about the customer. And once they have a huge amount of information of the customer, they can actually do their work better. They can underwrite the loans better. They can understand which customers are more risky, which customers are less risky. They can do their sales and marketing in a much more orchestrated way. They do not need to go for gung-ho marketing. They can do a very targeted marketing, which are products to be sold, etc. So it has brought market efficiency. And also from the customer's point of view, now there are portals where you can do a comparative benchmarking between 2 or 3 financial service providers. Say if you would like to take a loan for a certain amount, you can go to an aggregator and say that this is the amount of loan which I need, and just tell me how much interest rates do I need to pay. So what the aggregator would do, they would request this particular loan from multiple different banks, and the banks will say in their own codes. Say one bank is saying 5%, second bank is saying 6%. So as a customer, you also can see that there is a complete transparency that if I take loan from bank A versus bank B, which is benefiting me more. So there is a huge amount of information asymmetry problem being solved with the use of this kind of tech. New innovative business models have come up. As I was saying, that you have got new business models in terms of your payment aggregators, like you talk about the GPays and the PhonePays of the world. These are underlying technology that are using UPI. Then you have got like companies like Finvu, Sahamati, etc. So underlying they are using account aggregator framework. So it has brought huge amount of innovation, and a lot of new business models also have come up big time. Risk management and compliance also is being benefited because banks now have got a huge amount of data about the customers. Now, if you have heard of something called as ULI, similar to UPI, we have something called as ULI, Unified Lending Interface, which was rolled in 2014 in the month of August, right? So where ULI is a platform which is being developed by the RBI fintech hub. So what they have done, they have actually brought multiple data sources into the fold of ULI. You have got data around, say, the satellite pictures of different crops. You have got data about the regional information of pesticides, what kind of insect are infesting your yield, right? Then you have got information about the bureau. You have got information about the land, the ownership of the land. So all this information, they are now sitting in the framework of ULI, Unified Lending Interface. Now banks, if they are going to find out if a particular customer is risky or not risky, that bank not only can take the data which the customer is providing at the time of loan application, but also using the customer's Aadhaar number, the banks can find out in ULI that what are the other data points the customer has. The more data the bank will have about the customer, the banks can do the risk management in a much more better way, right? So you can understand the beauty that with a huge influx of data and they all pouring in at the time of credit appraisal enables the banks to be more efficiently doing the underwriting processes, right? So these are the different features by which digital infrastructure has benefited the financial service sector. I will be very happy to take pauses, but unless there is any pause, I will keep on going and take the questions at the end. Okay. So now coming to the approach which India has taken, as I was also discussing very shortly. So what India has done, it has taken while they created their digital public infrastructure, there were two things which were possible. One, India could have used a completely public infrastructure, right, where probably the Reserve Bank of India would have been not only doing the governance but also engaging with different vendors to create technology stack, etc. The other solution could be if India would have completely created this in a private space. That means you had got large players like what we have in the form of Visa, MasterCard, Amex. They are large private players and then they develop their own tech, right? So what India has done, India has taken the middle route. It has taken the good things from both the world. So in both the cases, be it private or public, there are some problems. So in the government, what happens? In government, there is a problem of bureaucracy delays. So when a project gets started, there are delays. The project management is not very efficient. Innovation is not as good as it is there in the private because number of players are limited. So the government, if it is completely developed by the government, there are some problems with the government digital public infrastructure, digital infrastructure. When it comes to the private, in private, probably the project management, etc. is good, innovation is good, but it comes at a cost because private players normally have the tendency of winner takes it all, right? So they will charge exorbitantly high rates, and also the transparency will be missing. So if I am using a private company's technology, for example, a Visa, I will not be able to say do a transaction of Amex or a Mastercard. So there are Chinese boundaries, right, where you cannot do talking to each of the other applications. So what India has done, India has tried to strike a balance between the private and the public. So what they have done, they have tried to create something which is called as a digital public infrastructure, which is being created by Section 8 companies. You have your National Payment Corporation of India, NPCI, who have created the UPI. You have got the UIDAI, who have created the Aadhaar. You have got the Sahmati, who have created the account aggregator framework. And then you have got various technology companies like iSpirit, etc., who do the technology coding, etc. And these are professionally managed. They are Section 8 companies, right? And they are reporting to the government. So in that way, what is happening? You, in one hand, have professionally managed things. You have got innovation, and also it is being not too money oriented. That means you are first of all having this focus on doing good for the people, and you are listing your solutions as a digital public good. And then once you have your solution being created, you are exposing the APIs, and these are all interoperable APIs. That means if today UPI is being NPCI is creating a API layer in which you can make money transactions, the same UPI API will be used by Paytm, the same will be used by PhonePe, the same will be used by Google Pay. So what you can see, it is giving an interoperable API which many private companies can build on. So Google Pay will have its own business model, PhonePe will have its own business model, etc., etc. They can have their own individual business model. They can do a lot of innovation, but they do not need to reinvent the wheel again. They do not need to invest their money, effort, time in creating a technology which is already there. So government is giving this as a distribution of public goods. So anyone and everyone can use it, right? And you can build on top of it. This is what is a beauty, that you are fostering innovation. You do not need to do things which already has been done. It comes as a public good. It's if I would like to draw an example, right, or a comparison, It's like electricity. So if you are consuming electricity at your house, you do not need to be concerned that how electricity is being generated. You just tap on the switch and your lights gets on, your fan gets switched on, right? You do not need to know. So what the companies have done, they have taken it, they have not gone into the process of generating electricity. They are, so companies like Bajaj and other appliances, right? So what they do, they are creating appliances which runs on electricity. They do not need to generate electricity. Same goes for your DPI. So if you are doing payments, you do not need to look into how the payment happens, which has been taken care by the UPI or the NPCI company. If you are trying to do a identity verification, you do not need to know how this happens. It is already taken care by the UIDAI. If you would like to do a data sharing, right? You do not need to know how it happens because already it has been taken care by the account aggregator frame. So the base, the core, the fundamentals, the foundational capabilities are already being done by the government of India with this Section 8 companies, and private companies can build innovation on top of it. So it's a combined venture between the private and the public, in which we are seeing a huge explosion of a lot of innovation in India is happening, right? And it is also domestic driven. That means it has been conceptualized and built completely in the Indian context, such that if there are some geopolitical risks happening outside, India is completely foolproof. We do not need to be bothered or worried about that because we have our own digital public, right? I hope this made sense. Let me quickly move on. We have got 15 minutes time. I will take just say 5-10 more minutes to quickly conclude, and then we'll have questions. Okay. So the different other features, because government in one hand has been very supportive of this digital infrastructure, and also we have got the RBI, the Central Bank of India's blessing to roll out UPI and other things. But there are other factors also which helped us to become DPI giant house in the global context, because of factors like the young population which we have, average population, and who spends a lot of time in generating data. So for them, standing in, making a payment in UPI is much convenient than standing in the line and taking out money from the bank, or opening up a bank account from the convenience of their home using mobile phone is much more preferred than going to the bank and opening an account. So the young population demographic drove that, and also we had a very cheap internet connection. It comes around 15 or 20 rupees per GB in India, which is one of the cheapest. I think there are only two countries who are above us, Israel and other country, and we are one of the cheapest internet connection providers in the whole of globe. And also Indian government in the past, they had this experience of creating technologies at scale, because we have got things like the electronic voting machine, IRCTC, the railways, right? So today IRCTC is able to generate 2.5 lakh tickets per minute. So we in India already, we have got that expertise of creating something at the public scale, at the population scale. So because of these benefits and because of the kind of attraction by the government and support from the RBI, this was possible to create something which we call today as India Stack, and which combines of multiple things like the payments layer, the identity layer, and the data sharing. So I have got many other slides, but I think this is the fundamental concepts. I would rather take more questions from all of you. I will just end up with this final slide on the three different rails which we talked about. The first was the identity rail, in which we saw Aadhaar coming into the picture in the 2010s, right? And then we saw payments, IMPS payments coming up, biometric. Until 2016, we see a lot of innovations happening. In 2016, we had the UPI coming to the forefront, right? It was very small, and if you look at today's context, it was minuscule, but today it has made huge leaps such that it has become the world's largest global payment in terms of the real-time payment. And also in 2016, we had something called as account aggregator, which is a data sharing framework, which enables the different banks and financial service providers to share the data after the customer gives a consensus. Only if the customer gives a consensus or agreement that you can share my data with some companies, right? Say tomorrow a fintech company is trying to show you aggregated outstanding balances across 5 different accounts. So this particular fintech company has to first get the permission of you, because your account is being used, right, from multiple banks. So all this consensus mechanism happens through this account aggregator model. I have a detailed slide on it, but I will not go through it, because I think what is more important is to make sure that you have understood the basic concepts. And if there are any questions, please feel free to ask that. Any question from anyone?
Yes. Hello.
Yeah, Mr. Ganashan, please go ahead.
Yeah, our goal is to make a developed country by 2047.
Yes.
But what is the capacity of this financial infrastructure, have you estimated that what will be required up to 2047 to make it developed country?
Yeah. So we have the right fodder in place. We have everything in place. The only thing which we have to grow, I will tell you from the example of the ratio of private credit to GDP consumption. So if you look at advanced countries, like if you look at China, if you look at US, the ratio of private credit to GDP stands at a very high. So in China, it is something around 180%. In US, it is around 120-25%, right? Whereas in India, we are standing at a private credit to GDP ratio of around 55-56%. So there is a huge amount of under penetrated banking segment, the MSME, mostly MSME, the micro, medium, and small enterprises, where fund is required. But due to the conventional ways in which banks are today providing the loans, right, to different people, so that actually is not taking care of these needs. Now, what this particular infrastructure has done, it has given up new kinds of models. For example, I will just quickly take example of two different solutions which has been created using the digital public infrastructure. Number one, there is something called as a OCEN. I'll just quickly take you to that particular slide where you can understand that how OCEN functions. Okay, I hope all of you can see the screen. So if you look at the OCEN stands for Open Credit Enablement Network, right? So what it has done, it has tried to connect all the different components of India stack. So if you look at it, if I am putting a lady is called Rajini. It's a very famous case study from the OCEN world. So what it is being said that this lady is almost a daily wage earner, or she is doing a business where she needs a daily loan. She sells her goods and she needs a daily loan. There are multiple things which can be taken care of by the digital public infrastructure which has been created. And if you combine that, they will be creating a very cohesive story. What OCEN has done, OCEN has created a framework or a network which they are calling as Open Credit Enablement Network. So previously, the problems with bank was what? The problems with bank was that they were not being able to give out loans to this segment because the amount of data was missing and the ticket size was so small that the kind of cost it took to give out a loan and the kind of revenue they got from the loan, they did not stand at any chance. So banks were intentionally keeping out of giving loans from these kind of customers. So the cost of each of the processes, right, while giving the loan can be much minimized by using the framework of OCEN. How it is being done, just let us quickly have a look. Say for this lady, she needs a loan. So she doesn't now need to go to a particular bank physically to stand and waste her complete day and lose her earning for that particular day. She can now just go to a credit marketplace app, download that app, and she already has got a Aadhaar KYC. She just clicks on that, the Aadhaar KYC number, Aadhaar number she provides, and then with the OTP based verification, the onboarding process gets over. Previously, which used to take say weeks or even sometimes 2 weeks, 3 weeks, this happens in a say fraction of a second, right? And then once the data has come, this data is the Rajani, the lady who is sitting at the middle, right? So she is interacting, she is doing multiple payments, right? And transactions. She's buying goods, say vegetable. She's buying vegetables from the seller. She's selling the vegetables again to the buyers, right? So all these transactions, and now we have the UPI layer coming in. So all these transactional processes, they are creating history. They are creating credit history for this particular lady. That data gets shared, right? That data gets shared and it gets saved in the public credit registry platform. Now banks will have the leeway to find out that this particular customer this lady can be given more loans on, or if Rajini is trying to make the repayments of the loan, that also she can do using the Bharat BBPS, right? Bharat Banking Payment Service Limited. So these are all enabled through this network, and each and every component which used to take long time, long effort, right? This has been completely obviated, and banks now are finding increased attention, increased focus on giving more loans to this under-penetrated segment. So as I spoke about this ratio of private credit to GDP, in order to increase from 55% to say 120%, we need this technology to scale up. We need the banks to have business representatives because many people will not be technology so savvy, right? They would need someone's help. So there will be business correspondents who are coming up big time. So this business correspondents will use handheld app devices, and the loans which were not possible for the banks to be given previously, now this has been made very much possible. So with the uptake of credit, with more amount of MSME empowerment, what happens if a MSME gets empowered? It not only increases the GDP of the country, but also it helps in generating employment, because a lot of people will get employed to that company. So it is completely sure that, with the use of the public credit registry, with the use of public digital infrastructure in place, it's definitely going to help the way the financial inclusion is going to happen, and also the loans or the credit gets dispersed, which definitely with the increase of the credit, we are going to reach at that developed country status in 2047 if things go as far as we have in visas. Now, there can be challenges, there can be problems, which once we face, then only we can understand that if those can be attacked on. I hope that answers your question.
How it is happening is because of ERP system or what?
No,
Enterprise Resource Planning System.
No, not ERP system. So as I mentioned, the government, what they have done, they have created something called as a digital public.
Okay,
right?
okay.
So digital public infrastructure is what? It's a shared platform you can think of. Right?
Okay.
Where you have got multiple components. You have got components of KYC, you have got components of Aadhaar, you have components of payments, you have components of credit. So all these components are seated in a shared basis.
Okay.
And when a private player, a fintech company, they would like to tap onto these APIs which have been shared, they do not want to go into making so much of investments in the technology. They can just use the technology which is already built by the government, right? And then use the technology and go to different people, and this has reduced the amount of time it takes to process a loan or even to onboard someone into the fold of financial.
Okay, thank you.
Right? Yeah. Any other question from anyone? Any other questions? So, okay, this is the first example. The second example which I would like to take, because of the paucity of time, I have intentionally kept it at this level. We are not going to do much of details. I will take you to the second example of ULI. This is something which the Reserve Bank of India Innovation Hub, FinTech Innovation Hub, has created. So they have created a platform in which the data of multiple perspectives has been captured. So as we speak, we have got satellite data, mobile device data, survey data, CIC data, open government data, say government schemes, what are the rates going on, if any customer has got any lawsuits or not, the macro data, the per capita GDP of the particular place, what is the inflation of a particular state, etc., the payment history. So all this information is now being stored in the unified lending interface. Again, a platform which the RBI has built. Now, say I am going for a loan to a particular bank. Normally, what the banks will ask me, they will say that give your salary slip, give your income tax, and say give your how much loan you want and what is the collateral you have. These few things banks will want. But with this small amount of data, the amount of appraisal or the understanding the banks can have for me, if how much rate I should be given a loan for, or if I am not being given a loan or given a loan in the first place or not. The decision is based on only a few data points which I am sharing with the bank. But now what has happened, if bank knows that I am Sowmya Das Gupta, with my Aadhaar number, they can tap into the ULI, where if I have got my information on utility bill payment, my bureau payment, right, if there are any surveys payment, which region I belong to, West Bengal or not, what is the inflation in that particular state. So the banks will have huge more amount of information data apart from the data which I am anyway sharing. Right. So with more amount of data, banks will be able to understand the riskiness of the customers even much more better. So as we have more amount of data in the system, the banks will have this particular tool to underwrite the loans in a much more efficient manner. Because say if I have got loans from other banks, right, and I have defaulted, that comes from my CIBIL report. If I have got say a huge amount of expenses in utility, my child's education fees, so that data now is with the bank because they will have that information. So based on all these data points which the bank will have, they will be able to take a much more informed decision about whether they would like to give me a loan or not, and if they are giving me a loan, how much interest rate they should be charged, or what are the covenants they should be doing in the agreement. So that is what data has been able to provide a huge amount of collateral. So instead of relying on the physical collaterals, more and more we are looking at things like the cash flow based lending or your information based collateral lending. So these are the new business models which has been enabled because of your alternate sources of data, which sits on ULI, and because of the amount of DPI, the digital public infrastructure which has been built, this has been completely enabled, because now your eKYC gets fast. If you would like to open a bank account, it can be done in a day's time. If you would like to get a loan, your onboarding process or verification process can get happen in a say few minutes time. If you would like to get a loan, the banks can do an appraisal, getting the data from different points of the economy, right, in a fraction of a second, and do appraisal in automated manner. So all these things, all these mechanisms are enabled because only we have the ULI layer, and the fintech players, they can actually build on top of that. They can build more innovation. So base has been given. Say you can think of this, the foundation or the base floor has been created. Now the fintech players can create floor 1, floor 2, floor 3, and this is a joint collaboration because government has given the base, private players are building on top of the base, and that's why we are seeing our economy growing so fast. And I hope that this momentum continues in the going future as well. And I expect that all of you who have joined this meeting, you may be joining financial services or not, you may be joining other industries or not. Please make sure that if you're working in India, right, your company do not invest in things which already the government has created. You just need to go and tap on to the right API which already is there for use, right? And you just use that, and if you would like to do something new, create innovation on top of that, which many private companies are. That is the way forward, and I think that is how we can go ahead as an. Yeah, any other question? I think I have tried to give you the basic idea of what DPIs are, the context of it, the different rails of DPI, the India stack, the payment rail, the identity rail, and the account aggregator rail. Then we spoke about two different networks, specifically the OKN network, in which the micro and the small medium segments are given loan, and the ULI, which has been created by the RBI FinTech Hub, where a huge amount of data resides. And now the banks will have this data at their disposal. Obviously, if the consensus is there by the customer, then banks can use the data and do a much more better decision. That is where I would like to end today. And now I will be taking the next 5-10 minutes more for getting any other question if anyone has. Yeah, I hope all of you could make some sense out of it. And I understand that half an hour, 45 minutes is too less a time to understand this complex network of DPI. But the intent was not to make everyone know everything in details in a nuanced fashion. The main intention was to just try to intrigue you, arise that curiosity, so that you can go and read. Anyways, I will share the deck with Nilanjana and the team at large, and they will be sharing this particular data the deck with you. You can go through them at your leisure, but please make sure that you appreciate the beauty of what DPIs have and the pivotal roles they are going to play in the making of India to be a developed nation by 2040. Yeah, I give it to you, Nilanjana. If there are any questions, please moderate. I'm here for the next 5-10 minutes to answer any question.
Everyone can fill up the feedback form which is posted in the chat box. And thank you so much, Mr. Gupta, for that insightful and engaging session. We truly appreciate your time and expertise. On behalf of SEMS Welfare Foundation, I extend our heartfelt thanks to our speaker and everyone who joined us this morning. And I will request everyone to please on their video for a group picture. Please everyone turn on their cameras.
So I just would like to mention one thing, because I have been using doing various consulting with banks in terms of the DPI, and I see that even the bankers, many of them are not aware and they are not leveraging the full potential. So my humble request, if you guys are going to take away at least one thing out of this session, please make sure you understand DPI, because this is going to make a huge dramatic change in the way the financial service is going to consume the DPI, and it's a game changer, I would say. It's very important. So please take interest and read about it and try to implement that when you join your workforce.